In Sarajevo, 1993, a banker traded his gold wedding ring for 3 cigarettes. Not 3 packs, 3 cigarettes. The lighter he traded it for was worth more. Because you can't cook dinner with gold, but you can start a fire with a lighter. Fast forward to Venezuela, right now, where fishermen refuse cash for their catch and instead trade directly for rice and plantains because the currency collapsed so fast, people gave up on money entirely within months. And here's the part that should terrify you. In every documented economic collapse, from Bosnia to Argentina to the Great Depression, the same pattern emerges. People with gold starve. People with practical skills and tools survive. I'm going to show you why $1,000 in the right goods will save your family when $10,000 in gold bullion leaves you desperate. Here's what we're doing today. I'm going to forensically examine what actually happens during total monetary collapse. Not theory, not prepper fantasy, documented reality from multiple countries across different time periods. And you're going to see why the conventional wisdom about precious metals as crisis insurance is mathematically wrong. Because gold has a fatal flaw that becomes obvious the second you understand how value flows when systems fail. By the way, I built a free early retirement calculator because most online ones are mathematically wrong. It uses BlackRock and Vanguard logic to expose the weak points in your plan. And I only ask for your email to send the report, so I don't store any of your financial data. Link in the description. So here's the central idea. Think of economic systems like software versions. Modern financial infrastructure, your bank account, your brokerage, your credit cards, that's version 10.0. Complex, interconnected, efficient when it works. The Amish, they're running version 1.0. Basic agriculture, hand tools, community barter, face-to-face trust networks. Now here's what nobody tells you about version upgrades. The more complex the system, the more catastrophic the failure mode. Version 10 crashes hard. Version 1 just keeps running. Gold is like cryptocurrency. It only has value if other people agree it has value, and there's a functioning network to trade it on. When that network goes down, you're holding a shiny paperweight. But a chicken? A chicken runs on version 1. It produces eggs whether the dollar exists or not. A carpentry skill? That's version 1 capability. It generates value in any economic regime. This is the Amish Hedge. Not a specific asset, a diversification across time itself. You're hedging against modernity failure by holding positions in old versions of civilization that can't crash. Let me show you how this plays out in practice and why it destroys gold's entire value proposition. Currency collapse happens faster than your brain can process. In Bosnia, the transition from functioning money to pure barter took months, not years. Not a slow decline, months. Selko Begovic, who survived the siege of Sarajevo for over a year, documented this in detail. Early on, people still tried using currency. Within weeks, prices multiplied by factors of 20, 30, 100. A pack of cigarettes that cost 1.5 German marks outside the war zone cost 40 marks inside. Your salary becomes meaningless when hyperinflation moves faster than payday. Venezuela, 2016 to present. Inflation exceeded 1,000,000%. Read that again, 1,000,000%. The bolivar became so worthless that Venezuelans jokingly called it the Bolivar Muerto, the dead bolivar. Here's the kicker. The government's response was to remove high-denomination bills from circulation and give people 72 hours to exchange currency that was literally being declared illegal. 72 hours. Picture your life savings. You have 3 days to convert it before the government declares it worthless paper. Most people didn't make it. They lost everything. Argentina, 1998 to 2002. The economy contracted 28%. More than 50% of the population fell below the poverty line. Those who denominated their savings in pesos experienced devastating losses. And here's the pattern that keeps repeating. Stage 1, prices rise. Stage 2, prices rise faster than paychecks. Stage 3, people lose faith in currency. Stage 4, currency becomes worth less than the paper it's printed on. Stage 5, economy reverts to barter and only utility matters. Now you're probably thinking, okay, that's why I own gold. Gold holds value when currency fails. But here's where the model breaks. What happens in stage 5, when there's no electricity, no running water, no food distribution. Let me take you back to Sarajevo. Selko watched his neighbor, that banker I mentioned, try to trade gold jewelry for food. The guy had real gold, probably worth 2 months' salary in the old world. But in a city under siege, nobody wanted it. Because you can't eat gold. You can't burn it for heat. You can't use it to purify water or treat an infected wound. The people who survived were the ones with practical goods. Lighters for starting fires, antibiotics for infections, seeds for growing food, soap for hygiene, tools for repairs. Here's a direct quote from Selko. People with gold starved, while people with practical skills and tools thrived. He specifically noted that in the early crisis, warlords and armed groups took precious metals from desperate people at can-of-soup value. They understood that gold would retain value after the crisis ended, but during the crisis itself, it was useless for immediate survival, so they'd trade 1 can of soup for jewelry worth hundreds or thousands. The person with gold had no leverage because gold addressed no immediate need. This is the fatal flaw in gold as crisis insurance. It only works if there's still a functioning market where people trust future value. But in total collapse, future value is meaningless. Present utility is everything. And gold has zero utility. Let me show you what actually traded at high value in Bosnia. Ammunition ranked highest, but Selko warned against trading it freely because whatever weapon or ammo you sell to someone might be used against you the next day. Security considerations dominate all trading decisions in real collapse. Hygiene items held remarkable value. Bleach could purify hundreds of gallons of water, worth far more than its pre-war cost suggested. A bar of soap that cost 50 cents before the war traded for a dozen eggs during the siege. Let that sink in. Soap outperformed gold. Medicine held extremely high value. Antibiotics, pain relievers, first aid supplies. Many people died from lack of access to basic medications that cost dollars in stable countries. A dose of amoxicillin became worth weeks of wages. But here's what changed my entire mental model of crisis preparation. Selko recommends owning 1,000 BIC lighters rather than a fuel-powered generator. Why? A generator costs thousands of dollars. It's impressive, it's high-tech, but a generator makes noise, consumes fuel, requires maintenance, and attracts attention from people who might steal it. Lighters are silent, portable, distributed across multiple units, so losing some doesn't leave you without fire-starting capability. They're cheap to acquire now and can be refilled. Selko had a large propane tank rigged to refill disposable BIC lighters. He traded filled lighters for food, candles, and other necessities. The insight is profound. A lighter provides fire. Fire means heating, cooking, and light. In a siege environment, these functions are non-negotiable, but it's a version 1 solution. Simple, robust, requires no complex supply chain. This is systems thinking. The Amish don't fail because they're not optimized. They succeed because they're anti-fragile. Low complexity means low failure modes. Now let's escalate this. Because Venezuela is proving the pattern right now, in real time. This isn't historical theory. This is happening as you're watching this video. In Venezuela today, fishermen at a beach resort called Patanemo exchange their catch for rice, plantains, and bananas brought by people walking from nearby towns. One fisherman was interviewed and said it directly. Money doesn't buy anything, so it's better for people to bring food so we can give them fish. Official currency became so useless that the effort to obtain it through wage labor wasn't worth the return. Think about that. Working for money became irrational because the money couldn't buy what you needed. Farmers travel hundreds of kilometers to Caracas carrying 200 bananas, 30 kilos of yams, 30 of cassava, 40 kilos of lemons to exchange for flour, rice, or pasta. Not to sell for currency, to exchange directly for other goods. In the coffee-growing regions, hardware stores accept coffee beans as payment. 3 100-kilo sacks of coffee trade for 200 liters of gasoline. Coffee beans have become currency because they're standardized, they're consumable, and they have use value. This is economic reversion. Modern collapse sends societies back to pre-industrial barter, and in that environment, gold is useless for the same reason credit cards are useless. Both require a functioning network that assigns them value, But coffee beans, those run on version 1. They have inherent utility. You can drink them. You can trade them. They're shelf stable. Here's a woman named Kayla Obal. She grows eggplant, tomato, and passion fruit in her backyard, specifically for bartering. She exchanges them for pasta, sugar, milk, or rice. She noted that this lifestyle mirrors how her family lived in the early 20th century. You see what's happening? Modern economic collapse reverts societies to pre-modern economic modes. The version rollback is real. And here's the comedic part. The Venezuelan government, facing this total rejection of their currency, didn't admit defeat. They just removed high denomination bills and created new money. As if the problem was the specific bills and not the fact that nobody trusted anything the government issued. Classic incentive failure. The government's incentive is to maintain the illusion of monetary control. The population's incentive is survival. When those diverge, the population wins by ignoring the government. Now, let's look at the Great Depression, because that's the crisis Americans actually understand. And the data destroys the gold narrative even harder. Farmers during the Great Depression struggled. Crop prices fell to devastating lows. Some burned corn as fuel because it was cheaper than coal, but farmers with productive land possessed an irreplaceable advantage. They could produce their own food. Documented experiences from rural Iowa show farm families raised large gardens with vegetables, canned fruit from orchards, produced milk and cream from dairy cattle, supplied themselves with meat and eggs from chickens. They bought flour and sugar in 50-pound sacks and baked their own bread. Farm wives made clothing from cloth, cut from flour, and feed sacks. These families had zero cash income, but they survived. Meanwhile, urban families faced total destitution. In Dubuque, Iowa, 2,200 workers lost their jobs between 1927 and 1934. Even workers who kept their jobs saw wages drop 30%. But the real killer was this. They had no productive capacity, no land to grow food, no skills to produce necessities. They were completely dependent on cash income to buy everything. When cash disappeared, they had nothing. Here's a comment that hit me hard. Someone wrote, "My grandfather survived the Great Depression because he had a small 4-acre farm, carpentry skills, and painting skills. Not gold, not savings. Land and skills." That's version 1 capability persisting through version 10 failure. And here's where it gets really interesting. Victory gardens during World War II proved this principle at scale. More than 20 million gardens were planted in 1943. They produced 10 billion pounds of food. That's 40% of the entire US vegetable supply. 40%. And 2/3 of these gardens were in towns, cities, and suburban areas. Urban people reverting to version 1 food production. By 1944, more than half of Americans growing gardens reported doing so out of economic need, not patriotic motivation. The government propaganda said it was about supporting the war effort. The reality? People were hungry, and growing food was the only way to eat. This is incentive clarity. The stated reason and the real reason diverged. Now, let me show you the academic data that makes this concrete. Farmland increased 17% during the 2008-2009 financial crisis, while the S&P 500 declined 46%. Between 2000 and 2009, the S&P 500 posted negative returns in 28 different quarters. In 26 of those 28 quarters, when stocks declined, farmland posted positive returns. Not speculation, insurance. Farmland produces income regardless of economic conditions. Crops, rental value, direct food. The mechanism is mathematical. And here's the comparison that should wake you up. Farmland's average volatility from 1992 to 2020 was 6.84%, less than half the S&P 500's volatility of 16.9%, and notably lower than gold's volatility of 14.8%. During periods of high inflation, farmland returns averaged 14.67% annually, more than double the average inflation rate itself. Gold doesn't produce income. It sits in a safe doing nothing. Farmland produces food whether the dollar exists or not. This is version 1 robustness. Let me give you a concrete scenario with real numbers so you can see how this plays out at the individual level. Meet David. He's 42, lives in a suburb of a mid-sized American city. He has $200,000 in savings. He's worried about inflation, currency instability, the standard collapse concerns. He has two options. Option A, buy gold. At current prices, around $2,000 per ounce, he can buy approximately 100 ounces. He stores it in a safe in his home. The gold produces no income. It requires insurance. It's a pure speculation that someone will want to trade for it later at a higher price. Option B, the Amish Hedge. He takes that same 200,000 and splits it 5 ways. 40,000 to buy a small piece of land, maybe an acre or two in a rural area within driving distance. 40,000 to build infrastructure on that land. A small cabin, a well, basic utilities, secure storage. 40,000 to stockpile practical goods. Medical supplies bought in bulk. Tools, seeds, water filtration, non-perishable foods, hygiene supplies, things with long shelf lives and high utility. 40,000 invested in skill development. He takes courses in welding, basic electrical work, permaculture, farming, equipment repair. He buys the tools needed to practice these skills. Final 40,000 stays liquid in the bank for short-term needs. Now let's run the scenario. The economy collapses, currency becomes unstable. In the gold scenario, David has 100 ounces of metal. If he needs food, he has to find someone willing to trade food for gold, which means finding someone who believes gold will retain value after the crisis. In the chaos, this is hard. And if he does find someone, they have all the leverage because he's desperate and his gold provides no utility. He might trade an ounce of gold worth 2,000 pre-crisis dollars for $50 worth of food because he has no choice. In the Amish Hedge scenario, David has options. His land can produce food. Even a small garden can produce meaningful calories. His well provides water. His cabin provides shelter. His stockpiled medical supplies mean he can treat injuries and infections. His tools mean he can repair things, which becomes a tradable service. His skills mean he can generate value for others, which creates trading opportunities. He's not dependent on finding someone to assign value to his assets. His assets have inherent utility. The math is brutal. Gold might preserve some wealth if there's still a functioning market, but the Amish Hedge preserves your life, which is the only wealth that matters when systems fail. Here's the second comedic cutaway. I can already hear the gold bugs typing their angry comments. But Tom, gold has been valuable for 5,000 years. Yeah, and for 4,900 of those years, people also died of infected cuts because they didn't have antibiotics. Maybe ancient wisdom isn't always optimal, just a thought. Now let's talk about the overlooked asset that determines who actually survives. Community networks. Meta-analytics studies across 148 studies with 308,849 participants found that individuals with stronger social relationships had a 50% increased likelihood of survival compared to those with weak social relationships. 50%. That effect size is comparable to quitting smoking and exceeds many established risk factors for mortality. Selko's account from Bosnia emphasizes this over and over. He notes that almost all trades were made in private arrangements after you got information about someone who had something they wanted to trade. And the best situation was if you knew that person before the war, so you had already built trust. Trust-based relationships become economic infrastructure when formal systems collapse. The Amish understand this at a cellular level. Their entire society is built on community interdependence. Barn raisings where the whole community builds a structure in a day. Shared equipment. Mutual aid when someone faces hardship. This isn't romantic. It's strategic redundancy. If one family's crop fails, the community ensures they eat. If someone needs a specialized skill, someone in the community has it. This is version 1 social infrastructure. In Venezuela, communities informally organize food sharing and barter networks that help distribute scarce resources. In Bosnia, communities organize around trusted leaders to manage security, allocate resources, and coordinate survival strategies. Social capital is survival capital, but it has to be built before the crisis. You can't manufacture trust when everything is falling apart. Here's what keeps me up at night. The United States has $38 trillion in debt. The Congressional Budget Office projects deficits will continue indefinitely. Interest payments on the debt now exceed defense spending. Think about that. We spend more money paying interest on money we already borrowed than we spend on the entire military. The Federal Reserve's balance sheet expanded by trillions since 2008. Central banks globally are buying gold at the fastest pace since 1996. More gold than US Treasuries for the first time. Why? Because they see the version crash coming. They're hedging. But here's the thing. When central banks buy gold, they're not preparing to trade it for groceries. They're preparing to back a new monetary system after the current one fails. That's a macro play. You're not a central bank. You need micro solutions. For the first time in civilized history, 100% of the world's currencies are fiat, none backed by gold or anything real. With global interdependency, the destruction of major currencies will likely happen simultaneously. Domino effect, systemic failure. This isn't conspiracy, it's incentive analysis. Every government has the same incentive structure. Print money to fund spending, inflate away debt, and hope the music doesn't stop on their watch. That's not sustainable. So here's what you actually do. The Amish Hedge is a diversified strategy combining 5 elements. First, acquire productive land if economically feasible. Even small-scale vegetable gardens provide meaningful food production capacity. Communities in Venezuela adopted rooftop gardens and backyard food production when necessity demanded it. An acre of land managed properly can produce a substantial portion of a family's food needs. But even a small suburban yard can grow vegetables. Start small, learn the skills, scale as resources allow. Second, develop practical skills targeting high-demand areas. Food production means gardening, animal husbandry, food preservation through canning or smoking. Repair skills like carpentry, plumbing, mechanical work, medical knowledge starting with first aid and basic nursing. These skills cannot be stolen. They degrade only through disuse. And they remain valuable regardless of what economic regime exists. A person who can fix a water pump has income-generating capability in any scenario. Third, accumulate practical goods with direct utility and long shelf lives. Medical supplies top the list. Antibiotics, if you can legally acquire them. Pain relievers. First aid materials, antiseptics, water purification tablets or filters, basic tools, hand tools, not power tools because power tools require electricity, batteries, lighters, hygiene items like soap and toilet paper, preserved foods. These maintain utility regardless of economic conditions and become barter currency in collapse scenarios. Buy them now while they're cheap. Fourth, build community networks explicitly and seriously. This isn't optional. Participate in community organizations. Build relationships with neighbors. Establish communication networks. Identify people with useful skills and resources. The time to build trust is now, not during the crisis. Join a local church or community group, even if you're not religious, because these are pre-existing trust networks. Know your neighbors' names. Help them with small things now so there's reciprocity later. Fifth, hold some precious metals for optionality after the crisis stabilizes, but only after you've secured the first 4 elements. Maybe 10% of your crisis allocation goes to gold and silver. Why? Because after the immediate crisis, when a new system starts forming, precious metals might become useful for large transactions or wealth preservation. But this is last priority. If you have to choose between gold and antibiotics, buy the antibiotics. Here's the brutal reality. I've got multiple hundreds of thousands of dollars invested across various assets. I have skin in the game, and I'm telling you, if I had to choose between my brokerage account and a 4-acre farm with a well, tools, and seeds, I'd take the farm. Because lazy investing built more fortune than crypto memes, but practical assets built more survival than financial theory. The question isn't if monetary systems fail. History shows they always do eventually. The question is whether you'll position yourself to survive when this one does. Gold is a bet that there will still be a functioning market that assigns value to shiny metal. The Amish Hedge is a certainty that food, water, shelter, medicine, and skills will always have value because they address non-negotiable human needs. You think diversification means stocks and bonds. Real diversification is version 1.0 and version 10.0 simultaneously. Most of your wealth can stay in the modern system because that's where efficiency lives. But your survival allocation, that needs to be in assets and capabilities that work when the modern system doesn't. 3 practical takeaways. 1. Start a garden this spring, even if it's just tomatoes and lettuce. Learn the skill before you need it. 2. Buy $1,000 worth of practical goods this month. Soap, first aid supplies, water filters, lighters, basic tools. Spread it out if you need to, but start accumulating. 3. Meet 3 neighbors this week. Real relationships, not Facebook connections. Know who lives around you and what skills they have. The only question is whether you'll see the version crash coming, or be the person trading gold jewelry for a can of soup while your neighbor with a chicken coop eats eggs. Now go diversify before you're forced to.